now Startup Central, India's first and only daily show dedicated to startups and entrepreneurship. I'm Chandra Srikanth, joining you live from India's startup capital, Bangalore, and we have a power-packed edition for you over the next 20 minutes. But first up, the headlines. Ola CFO Rajiv Bansal says he wants to make the cab aggregator IPO ready and is putting all the processes in place. He also says that while he will focus on prudent financial management, he will not allow the company to become too bureaucratic. That's an ET Now Startup Central exclusive. On our funding meter this week, we look at the week that's gone by. Doesn't look like good news. Funds seem to be drying up, with angel investors also tightening their purse strings. If you're a startup in the SaaS space, then you're staring at a $10 billion revenue opportunity over the next 10 years. That's according to a special study by Google and Accel that's coming up on the show. One more aerospace major to really help your startup dreams. We're talking about global aerospace major Airbus, which is bringing its accelerator program to India. And what's Friday without some Bollywood action? We get you an exclusive chat with Kunal Kapoor, who tells us all about his venture Keto and the social impact that he's trying to do through this. Over to our top story then, where we spoke to Ola CFO Rajiv Bansal, who, remember, earlier was the CFO of Infosys. Now we spoke to him about the lessons that he brings from Infosys to Ola, and what are some of the things that he will not do at Ola which he used to do at Infosys. Now Rajiv Bansal told us that he is getting Ola IPO ready and putting all the processes in place for the same. He also said that while his focus will be prudent financial management, he will ensure that Ola really retains its agility as a startup. Here's a slice of that conversation.
The advantage of being in a startup is that you are looking at, investments are much more easier to make. You are looking at a much larger story. You're trying to you're looking at accelerating your growth, capturing a certain market share, right? And that is, when you have private equity guys backing you up, who believes in your vision, who understand your strategy and back you up there, I think your ability to invest money for the future is far more easier. Right? But at the same time, we have to be prudent in the way we spend money.
In your last fundraise, I think you valued it over $5 billion. So in the next time you go to market, again, will it be from your investors, or will you even look at tapping public markets? Are you prepared for that? What is the roadmap?
I would not want to say that we want to raise money through private equity or IPO at this stage. But having said that, I think...
But you're open to both.
The idea is that you have to be open to both, right? You have to raise capital as you go along, because you have a great vision ahead of you. You have to invest for growth. You have to expand, and you would need money. But having said that, being an IPO ready is not an easy task. It means that you need to have a scalable and sustainable business model. Having come from Infosys, I would want this company to be IPO ready as early as possible, because these are things which are good for an organization to build as early as possible in its journey. But does it mean that we will go for an IPO immediately? No. That is a different decision altogether. So being ready for something...
What kind of timeline are we looking at? Either, your next fundraise or IPO, what kind of... how long can you go with the current cash that you have, the cash that you're generating to keep operations going? By when will you need to tap investors again?
I think they're very well capitalized. We have a lot. We raised about $500 million in the last round, so we're very well capitalized. We have a lot of cash. So I don't think we're going to raise capital only when you need it. But does it mean that we don't have a plan? Yes, we have a plan. Do we want to be IPO ready as quickly as possible? Yes, we want to be ready. Does it mean we're going to go for an IPO immediately? No. Right? So these are different decisions. As an organization, we would want the best processes, best systems, best execution engine, best strategy, best of everything. right? And that means that is what IPO ready means.
Considering the grocery cafe experiment hasn't worked, I think you're no longer doing that. You've shut that. I mean, is it fair to say that everything that Uber does in the US will not work in India?
Uber is operating in a very different market. US is a very different market. There, if you look at the car density, is almost 63%. India is only about 67%, right? They're two very different markets. Here, US has a great infrastructure. India doesn't have infrastructure, right? Even if people want to buy cars here, can they really buy cars? Even if government wants to build infrastructure, can they really build infrastructure, because it requires a massive capital investment? So the idea is not about trying to do what competition does. It's to be ahead of the curve. It's to be able to innovate ahead of anybody else. And I think if you look at our market share in India, we are clearly ahead of the curve. We are innovating much faster than anybody else here.
Right.
And that is the way I would see the way forward too.
Quite a conversation there. I've always, been used to interviewing Rajiv Bansal in the Infosys boardroom, but that's quite a transition from Infosys to Ola. But we now go to the funding meter for the week powered by Venture Intelligence, and it's really not a pleasant story there because funding action has dipped in the last week, with even angel investors who come in at the very early stage tightening their purse strings. We have a special report in this package.
Funding action continues to dry up in the startup space, and there's more data to prove it. The week gone by witnessed just about 8 deals worth $24 million being struck, and that is lesser than the 10 deals worth $34 million that were struck the week before. Angel investments also skidded from as much as 17 deals in the last week to just about 3 this week. Although fundraising was scarce, some stood out of the glut. Hopscotch.in topped the list with $13 million, followed by Medcube Healthcare India at $4 million, and Aha.in and Imarticus Learning with $1 million each. Apart from that, fashion portal Jabong.com is set to get a fresh round of funding as parent company Global Fashion Group decided over the week to pump in around $20 million. And in some M&A action, publicly listed Z Media Corp struck a deal to acquire 80% stake in India Today Group's loss-making e-commerce and TV shopping entities Today Merchandise and Today Retail Network for over 165 crore rupees. Going forward, it remains to be seen if the incentives announced for startups in Budget 2016 has any impact on the stream of funding.
Now we need to see if that was an aberration or if next week continues to be difficult. But moving on, if you're a startup in the software as a service or the SaaS space, then perhaps there's no better time than now, because you may be staring at a $10 billion revenue opportunity over the next decade and a valuation of $50 billion by 2025. That's according to a study commissioned by Google and Accel partners. Now, why should you be excited about this, and why are investors broadly excited about the SaaS space? Does it have to do with better unit economics, better cash flows? We spoke to Shekhar Kirani of Accel Partners to find out.
This is an excellent time, a great opportune time for Indian SaaS companies to tackle the global markets, including emerging and India. The market is wide open. Customers are willing to buy online. If Indian companies can build a world-class product out of India and take advantage of the local talent available, they can build a sizable companies out of India. And when we looked at the data, Google and us as Accel, we looked at it, it looks like a perfect time for Indian entrepreneurs to go and tackle this market.
Why is it a perfect time?
See, the wind is in the favor of Indian companies right now. Is in case you can build a great product, the market is wide open in the sense that $225 billion SMB market, only $25 billion is gone into SaaS. Remaining $200 billion is up for grabs. Customers are buying online. Customers are willing to experiment online and give money on these products online.
On a larger picture, should we read it as a shift in trend for you as well, that you're now betting on companies with perhaps better unit economics, better cash flows and profitability?
We have been focused on enterprise SaaS day one. we have done quite a lot of, around 50% of investments are in e-commerce and consumer tech, but around 25% of our companies are already in enterprise SaaS. We have taken quite a lot of Freshdesk, we have taken a bet at ChargeBee, HotelLogic, Zenoti, and many MindTickle, CleverTap. Many companies we've already taken bet. They're already growing very well. So there's no change in strategy per se. We've been doing enterprise SaaS.
Fair to say that the current environment will be kinder to startups in the SaaS universe because they have a viable, business model, cash flows happening.
Any good companies in any B2C or B2B who got good unit economics and growth prospectus, as well as going after large markets, has best attention from every investor in the world. And this is a fast-growing market, and SaaS is a fast-growing global market. So it's going to balance out based on how entrepreneurs build great companies.
Where does this report go from here? I mean, today you have the who's who from, the VC world, startups, to really unveil this report. But what happens after this? How are you going to take it forward? Or, is this more of a thought leadership kind of report to showcase the scale and scope of the opportunity?
So we have been fortunate to have invested in early successful enterprise SaaS companies in India. We thought we use this data along with the Google data, so share with the ecosystem so that all of us as VCs as well as entrepreneurs build a great outcome for India. So this is the purpose of this report.
With all the worries around consumer internet, I guess investors will start placing bets on the B2B space where, revenues are more predictable, cash flows also are more predictable, which is why you're seeing this whole bullishness around the SaaS space. But moving on, there is no dearth of accelerators as far as India is concerned, but there's going to be one more coming to India, and this time from none other than Airbus. Now, the global aerospace major is bringing its accelerator program, Airbus Biz Lab, to India very soon. But you don't have to be a startup in the aerospace space to qualify for that. It's a completely sector-agnostic accelerator. Rahul Rama spoke to the person heading this program to really find out why they are bringing this to India now, and what kind of startups will really qualify.
We are running a 6-month acceleration program where we are bringing to the startups our experts. We've got dedicated coaches which support all along the 6 months the startups plus a mentor. So the idea basically is to help the startups to develop his innovative concept within the aeronautical market and to make the demonstration at the end of the 6 months that there is market appetence and that there is value creation at the end of the day.
No, I want to ask you, is it startups in the area of aerospace and defense that qualify, or other startups in areas of SaaS, e-commerce really being a hot pick here? So would your accelerator program cater to any startup that wants to walk in and grasp the experience that Airbus has?
Yeah, any startup is most than welcome. I can tell you, aeronautical is not the best playground for startups. It's complex technology, long lead time development, huge investment, and certification, complex regulation. If you're a startup, you run away from that. So what we're looking for is startup which has developed an innovative concept outside from aeronautics in any industry.
But I want to know from you the timing of bringing your program to India. What really drove this decision? Are you now abreast with this bustling startup ecosystem, which is the third largest after US and UK? So what really drove that decision to focus on India really?
We've got a lot of startups here, and we strongly bet on Bangalore. The second reason is that our accelerator are a little bit different from the others. We've got the hybrid concept. So what means hybrid concept? That means that in the same platform we are mixing up startups and Airbus collaborators with innovative ideas working as a startups. So we are applying this famous 6 months acceleration program to them as well. So, and they are working on a day-to-day basis in the same office. We've got 300 engineers here with Airbus India in the platform. So the second reason is that we have been able to have and to implement our hybrid concept in Bangalore as well.
For all the startups watching this show, tell them 2 things that they must have in their DNA to qualify for the Airbus accelerator program here in Bangalore.
Passion and surprises. Come and surprise us. Don't come and talk to us like any aeronautical supplier. Talk to us to surprise us and to say, I'm going to disturb you, I'm going to provoke you.
If you're a startup looking for some mentorship, I guess you know where to head to. But coming to our final story today, what's Friday without some Bollywood, without some glam quotient on the show? Which is why we have Bollywood actor Kunal Kapoor, the man who wowed you in movies like Rang De Basanti. But he's not talking Bollywood today. He's talking about his venture Keto, which is a crowdfunding platform. Rahul Dama caught up with him to really ask him about, you know, what's driving Keto and Kunal Kapoor's plans going forward in the startup universe. Let's listen in.
So the dream really was to build a bridge between people that have capital and can help and people that need capital and need helping. There was no better way of doing that than technology, because we spend so much time on our smartphones and on our computers. I felt like it was important to create a platform which was very easy to use, very engaging, and you know, you could be sitting anywhere in the world and you could take 2 minutes off and help somebody somewhere in the world.
You know, was it a personal experience that you had, or someone around you that really encouraged you to consider this sort of a foray?
No, it was a personal experience, of course. Like I said, I was working with these NGOs for a couple of years, and it was something that I was thinking about for a long time. And fortunately for me, I happened to meet Varun Sheth, who's the co-founder of Keto, and he's somebody that had worked in the social space as well and grappled with the same problems and issues. And we got chatting and we realized that, you know, we wanted to do exactly the same thing. So yeah, it came out of a strong personal experience.
You know, also you're very choosy when it comes to movies, and I believe now you want to invest in startups as well.
Sure.
So what would be your top 2-3 criteria, and which sector startups are you looking at to invest in?
Well, you know, it's not sector specific, but the few investments that I'm looking at, for me, what's really important is that you don't get carried away in this whole valuation game, because then it becomes like a lottery ticket. You know, this company is going to grow 10x, let's invest in it. I think for me, what is really important is somebody that has a solid business model and somebody that wants to build a business that is going to last for a long time. I think that is really important.
What's closer to your heart?
Oh,
you know, movies, startups, and now with you looking at investing in, how are you really going to juggle time? I know you work in select movies, right, and startups also you're going to be pretty selective.
Well, I think, you know, really, like I was saying, is that, you know, when you're driven, when you're passionate about something, there's always time. There's never a lack of time when you're passionate, because then it doesn't feel like an effort at all. It's very difficult to choose between the two. I mean, both of them are completely different, and I enjoy both of them. But the core of both of them are very similar, which is that they're both very creative. People often think that a startup is something that is just a business. I think it's something that's very creative, because you're looking at disrupting something. You have to be really creative to do that. So for me, I'm a creative person at the core of it, so I enjoy anything that is creative.
Lastly, you know, serious question, fundraising plans that you have for Keto,
Right.
how well capitalized are you? I'm sure you're looking for fundraising.
Right,
How
yeah.
much would you look at? And also plans on international foray.
Well, you know, we've, in fact, in the last year, we've had 2 offers to buy us out and buy in from international crowdfunding platforms as well. But we've refused to go that route. Because in fact, one of the platforms also invited us to the States to come and see what they were doing. So that, you know, we'd know each other before we could sort of work with each other. And we realized that we were doing pretty much everything that they were doing in terms of technology, in terms of what we were attempting to do. So we didn't really need anybody to buy us out or buy in. What we are looking, obviously, is to raise money, and we are going to do that this year.
From Bollywood actors to investors to unicorns to global voices, it's truly been a power-packed edition. But that brings us to the end of Startup Central today and this week. It's been a pleasure bringing you this show. Keep it with ET Now.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.